Hey there, it's Mike Langford. Welcome to another episode of the SoFin Podcast, part of the FinTech Marketing Podcast Network. This week on the show, I have Richard Steggall, the CEO of Urban FT. Now, you, like me, may have never heard of Urban FT before this show, but one of the exciting things about the fintech space is you're constantly running into these types of companies where you've never heard of it, but then when you learn a little bit more about what they're doing, you really gain an appreciation for the innovation that companies like Urban FT have provided. And chances are you've actually touched their technology in some way, shape, or form because their FinTech Core solution is providing the backbone for the digital experience for many of the financial institutions that you use probably. I mean, over 500 financial institutions across the United States are using the Urban FT FinTech Core platform. So really interesting stuff. I love these types of driver technologies and thinking about it because without them, our space would be a lot more difficult and a lot more expensive for community banks or fintech startups, right? The fact that Urban FT exists means you don't have to go build it all yourself. So really, really cool stuff. I think you're going to enjoy this conversation with Richard. I know I did. Before we get to the conversation with Richard, make sure you make a note to check out some of the other podcasts on the network. For instance, the Advisor Financing Forum podcast that we produce for Skyview partners really came to mind as I was having this conversation with Richard because the Skyview team has assembled a network of community banks to provide loans to RIAs and independent financial advisors for M&A activity and other use cases. And one of the things that Scott Wetzel, the CEO of Skyview, often says is that you as a small business owner should consider working with a community bank because not only will you get better white glove service from your banking partner, but they also have all of the digital technology offerings that you've come to expect, right? Like mobile banking and online banking and digital payments and all the type of stuff that you really want from your bank as a business user. And it entered my mind during this conversation that chances are many of those community banks are leveraging Urban FT's FinTech Core. So really cool stuff. You kind of see how this all comes together. Really, really interesting. So make sure you check out that podcast. And also check out the Modern Financial Advisor podcast by Trulytics as well. We've got some really cool stuff coming up there. One episode that I'm really excited about coming up here in the future is Tony Steach, the Chief Operating Officer of Naviplan Advisant, is coming on the show, and we are going to have a blast talking about the future of tech for the wealth management space. So don't miss that. Make sure you subscribe to the Modern Financial Advisor podcast. You can find that show plus all the others we're producing on the network by going to finsermarketing.com/podcast. There'll be a tile there for each show, and new shows are coming really soon. I'm particularly amped about one in particular that's coming very soon that we're in the early stages of producing. So I have a feeling you're going to love it as well. All right, let's get to the conversation with Richard Steggall of Urban FT. Well, Richard, thank you very much for joining me today. I'm really excited to have you on this show. I've been looking forward to this ever since last week when we were introduced by kind of a mutual connection there. Kelly, she sent it over and said, hey, you should get together with this guy, Richard. They're really working on an exciting new expansion of their startup, and you got to talk to them. So welcome to the show.
Thanks for having me, Mike. Looking forward to it.
That's great. So I thought it'd be kind of fun to kick things off with a bit of a modified elevator pitch because Urban FT was actually founded in 2012. And normally when I get a startup on the show, I'm saying, hey, let's do this elevator pitch because the company is a year, maybe 2 years old, but you've been around for a little while. However, as I mentioned, you recently launched a major new solution set, which is greatly expanding the value of the company, what you offer to your clients. So how would you describe Urban FT in a kind of elevator pitch to someone who's never heard of you before?
Mike, I think the first thing is we don't think of ourselves as a startup anymore. We think of ourselves really as an early stage company now. We launched our first service in 2015, and what we've actually accomplished since then is quite astonishing. But, we've morphed from being a white label digital banking platform in 2015 to today being a centralized FinTech Core that brings together an entire ecosystem that was otherwise fragmented. We work alongside financial institutions' banking core or payment processor. And we make it possible now for that financial institution through two vendor relationships and two integrations to actually access such a breadth of capability that is not only available today, but what things that will become available in the future. And, we look back at where we were in 2015, as I say, that was our first ever service, to where we are today. As a FinTech Core, we're now serving over 500 financial institutions. We're processing about $18 billion in transactions, processing about 11 million images. We do about 5 million mobile sessions a month. So, as I say, that growth that we've had in the last 5 years since launching has been quite phenomenal. So, as a FinTech Core, our purpose now is to really drive innovation, to be the innovation partner for a financial institution so that they can actually roll out products real time, quick, efficiently, without the technology burden that they've otherwise had, without the regulatory burden, and allow them to be more relevant and meaningful within their respective communities.
I really like that. And I'm glad you mentioned that you don't think of yourself as a startup anymore. You are absolutely an early stage company that is well established. Obviously, as you mentioned, you got 500 clients and you're processing millions and millions of transactions, and lots of stuff is happening across the core. So I'm really glad you made that clarification, because I think too often when we think about early stage companies, we do refer to them as startups, and startup has that connotation of like, this thing's still trying to kind of figure out things and get its legs under it, right? And you clearly have established the company very well.
Yeah, I think of a startup as traditionally being something that's yet to prove out its business model, yet to demonstrate that it can stand on its own 2 feet, and yet to demonstrate that they're delivering real value to their respective client base. For us, we've been incredibly capital efficient over the years. We've been incredibly focused on generating positive cash flow and standing on our 2 feet as opposed to burning other people's money.
No, makes sense. That's really great. I like the way you put that. It's really interesting. I used to get a little frustrated because for years people were still referring to Twitter as a startup, even though it raised, billions of dollars, not billions, but hundreds and hundreds and hundreds of millions of dollars of capital, and it was, they had been in business for like 8 years before it went public and so forth. And I'm sitting there going, when did they stop being a startup, right? So it was really, really interesting. I wonder if we could get to something that might not be 100% obvious to some listeners, because we do have a big fintech listenership and financial services listenership, but they might not be familiar with the term core. So could you give a little definition of like what is a fintech core, just for those who might be a little uninitiated? And I always like to make sure that, sometimes we throw around terminology here in the financial services and fintech space, and if somebody doesn't know it, I don't want them to feel like, darn it, I have no idea what that meant, and we lost them.
Yeah. So, really, the genesis of a fintech core comes back to what is generally understood within retail banking, business banking, and the payment space as a banking core. The banking core is fundamentally a general ledger that supports all sorts of reporting in branch systems, ATM networks, and the list goes on. But fundamentally, it is about delivering, excuse the pun, but the core services that the financial institution needs in order to operate as a financial institution. We then looked at, well, what is the role that we now serve in this market? And I will define this market as being really banks and credit unions and other non traditional FIs who are focused on delivering retail banking or consumer banking services as well as business banking services. We're not into wealth tech and some of these other areas. We're not into lending per se. We're very focused on this particular area of the fintech segment. But the problem that was emerging was that as these financial institutions needed to move to start ingesting and therefore deploying other services such as account aggregation or PFM solutions, personal financial management, or they needed to be doing peer-to-peer transfers, remote deposit capture, ACH, loading into the native wallets on the mobile handsets. All of these functionalities are now expected by an end user, and yet the banking cores are not embracing these capabilities in the way that they potentially should, so that their banking partners can actually take the underlying capability and roll it out as part of their product set. So the banks are left to having to go to third-party vendors on nearly a case-by-case basis to negotiate a relationship, to perform vendor due diligence on that partner, to do a technology integration, either with their own middleware and or having that party integrate with their core. It's incredibly expensive, it's incredibly time consuming, and it's creating a regulatory headache. More importantly, because of these, we'll call it barriers to entry, it is actually precluding so many financial institutions from being able to innovate. So when we refer to a FinTech Core, we're actually saying we've created a unified platform, which we refer to as our X35 FinTech Core. And all of these third-party services, as well as our own native services that address probably 80% of the functional requirements that a financial institution has, they're all available through a single integration. They're all available through a single vendor relationship. They're all billed through a single monthly invoice, and they're all part of fundamentally a consumption-based pricing model. So this now provides the platform for financial institutions to truly be able to dream about what they want to deliver and then deliver a truly exceptional product into the communities they serve.
I love it. I love it. What I really find very exciting about this is I've often referred to things like Urban FT and your core as driver technologies, right? These are not the stuff that the consumer knows about or sees. And a lot of the stuff that gets all the sexy press in the fintech world is the stuff that's consumer facing, right?
Absolutely.
It can be some business related stuff like Stripe and so forth that you sometimes get some flash, right? It's making it easy for small business vendors to throw up and accept payments on their website and that type of stuff. So some of that gets some retail eyeballs, if you will. But the stuff that you're doing is so important, right? It's making it possible for these smaller financial institutions to provide the level of service to their consumers or their B2B, their business customers in a way that they would expect, right? Because we're in a world now where you can't not be on my iPhone, right? I expect to have a mobile app that allows me to do certain things like make deposits by taking a picture of my check. I expect certain things from you, a really robust digital experience on your website. And so I love the fact that Urban FT is there making that possible for these clients.
If you look at the need or the reason why these neo and challenger banks have entered the marketplace, it's because a void has been left there because neither the big banks nor the smaller regional and community FIs have actually created solutions that address that void. And we do have a population within the community that wants to have their entire banking experience digitized, from the sign-up process through to loan origination, through to account management and payments capabilities. But that is still a fairly small segment of our population in comparison of the entire population that is banked here in the US. So, rather than actually conceding defeat as it relates to the digital relationship that a client has with their financial institution, banks and credit unions are now actually able to leverage technology such as that provided by UrbanFT to actually go out and create their own digital relationship with those end users, a relationship that probably doesn't just compare to, but probably even exceeds what most of these neo and challenger banks are doing. Because the neo and challenger banks are providing an alternate banking capability, but they are not providing a complete banking relationship to that user. And the banks still have the competitive advantage in that they are providing a complete relationship. They are also providing a complete, or can now provide a complete digital relationship. And that is now supported by their physical presence as well. And when we look at the confidence we have in banks versus startups, that confidence is reiterated or further supported by the physical presence that they have.
Yeah, I 100% agree. I don't go to the bank often, right? But I did have an instance, and this was years ago, but we were buying a house and I needed a cashier's check. And now I guess you could just wire things or whatever, but I needed a cashier's check. And if I was 100% digital, I don't think I can get a cashier's check at day one. Or if I have a question about a specific business banking product, if the bank is near me, I can go swing in and actually talk to a real human. And I think there's always going to be a need for that. So I want to jump around a little bit here because anytime I have somebody on the podcast, I'd like to do it just a tiny bit of research on the person, see if I can learn a little bit about their early career instead of asking them to take me through their entire career and how did you get here type of stuff. I figured, yeah, I'll do a little research. So I jump on your LinkedIn and I found it incredibly interesting that you didn't get your start in financial services. Actually, kind of made a bit of a mid-career change into the fintech space, which it's somewhat rare to see somebody jump successfully into fintech or financial services because it's a complex ecosystem, right? I mean, I think probably more than any other industry, people are like lifers in financial services, whether it's banking, wealth management, or insurance. Like once they're in and they get moving, they just kind of stay here. And it's somewhat insular oftentimes in this space. So how have you overcome some of the challenges that you probably faced coming up to speed in this very complicated vertical?
Mike, that challenge that you refer to might have actually been the biggest differentiator we as an organization had. I didn't come into this industry with any preconceived ideas on how things were done, how things should be done, or what is or wasn't, more importantly, what isn't possible. I was constantly hearing people, though, say, oh, you can't do this because of that. And I think coming into it with a fresh set of eyes, a little bit naive, allowed us to really say, well, what is it that needs to be done differently? What needs to be done better? And common sense is probably the biggest asset that anyone can leverage in business. And taking a common sense view of where the industry needed to head without any of the bias that had been burdening all of our competitors for these decades prior to me meant that we were able to take a very different approach. And it's that different approach that's, again, allowed us to be a very successful organization and now a very successful early stage company.
Yeah, I think it's really important to have that, fresh set of eyes sometimes. And I think, as I mentioned, I think this industry oftentimes is very insular, right? Which leads to a lot of, kind of just staring at your own little vertical with the blinders on a bit and not seeking ideas from outside the space. But I often encourage people, whether it's on this podcast or others, hey, look, you should be learning from other industries, looking outside your space. That's how things move forward. And it's also how you avoid getting caught with your pants down, right? When the market moves against you or there's some new innovation that catches you off guard, right? Make sure you're constantly looking outside of the space.
Mike, let me throw you an alternate perspective, though.
Sure.
Um, some of these neo and challenger banks have been started by kids in their early 20s. And as much as I'm all for entrepreneurship from a very early age, and I've been an entrepreneur since I was 18, the thing is, now that I'm in my 40s, I can easily confirm that I was naive and stupid when I was in my 20s, still a little naive in my 30s. But the thing is, as you do have experience in different industries and in life, you approach problems differently, you approach opportunities differently, you're far more calculated in how you do things. I think, this is the sort of thing that my parents and my grandparents used to refer to as wisdom.
Mm.
And so when you're actually able to couple wisdom with entrepreneurial spirit, you recognize that you've got to be tenacious, you've got to stick to what you set out to achieve. But at the same time, you've got to be willing to iterate because you can't be too proud to not change your strategy a little bit. Fundamentally, you know where you want to get, but you might just be needing to take a different course to get there. And that is, again, why I think a company like ours has actually navigated 2020 quite well. A year when I've seen so many of our competitors have either stagnant or negative growth, we're still achieving double-digit growth and double-digit growth that a lot of our competitors would be envious of. But that comes down to, again, being willing to be pragmatic whilst also being supremely optimistic about what we can do for the clients we serve.
I love that you brought in the wisdom thing. And it's no shade at younger entrepreneurs, right? There are some really bright minds out there, but the ones that usually succeed and do incredibly well very early on in the process start tapping the wisdom of people who've been there for a while, who have gone through other experiences and have seen different things tried over the years and understand why some paths are a little more challenging than others. And then sometimes, frankly, it comes down to how do you navigate the personalities at some of these institutions? Again, our business, the financial world, because a lot of the people in these companies are lifers, because they're more conservative by nature, they need to be more conservative. It's not that they don't want to see innovation. It's just that they want to make sure that that innovation doesn't ruin the business, right? Because they have been entrusted with the assets of their clients, right? They're entrusted by their investors and so forth. And they understand this business has been around oftentimes for 100 years. You don't want it to be ruined on your watch, right? So that's a really, really important point you make. I wonder if we could dive in a little bit more on your customers, on those community banks and the smaller banks we talked a little bit about, because I've been recently fascinated or enlightened, if you will, by one of our customers, Skyview Partners, who I host and produce a podcast for them. And actually, I introduced you to Scott Wetzel, the CEO there at Skyview. And they work with a network of community banks to serve their customers, which are registered investment advisory firms and independent financial advisors, and provide loans for them, which this is a segment that was previously really not served. And Scott has made the point about, community banks offer a lot for business owners, right? Because you're going to have a relationship with a human there. You're not likely to have your bank competing with you if you're a financial advisor. Most community banks don't have a wealth management arm, so they're not going to try to steal your customers from you. So I wonder, how did you and the team at Urban FT decide that small banks was a segment that you wanted to serve initially?
Really, it was a segment that my chairman, actually, I'll take a step back, my chairman, Cliff Mason, he's an industry veteran. And I remember talking to him well before he even came onto our board. And he said he still banks with the same small credit union in Georgia that he'd been banking with since I think he started his career. And yet, someone who had been in the industry for so long, working with so many different alternate financial service providers, many banks, I found it truly amazing that he would. And I said to him, why is it that you bank with them? Well, because the fees are incredibly low. They look after me. I can call them up and get problems taken care of right away. And, they haven't given me a reason to leave. And then I said, all right, that's great. He said, the only thing is they just don't have some of the things that your Bank of Americas and your Chases have. And I delved into that. I said, what is that? And of course, at the time, it was all about the mobile experience, even the internet banking capabilities. Some of those things that we were now taking for granted just weren't there. And, I looked at this statement, it was quite a profound statement to us. And we said, well, what sort of asset size was this institution? And it was just under $2 billion. And then as we started looking at some of the credit unions, you had so many credit unions that are owned by the members that are serving niche pockets within the communities that are actually doing right by those community members. But they could range anywhere from 50 million in asset size up to, say, 500 million in asset size. So why is it that those community financial institutions didn't deserve the ability to service those customers or members, as the case may be, in much the same way as the big banks do? Because fundamentally, these sort of sub $2 billion financial institutions have a business model that is very customer focused. If I look at the too big to fail financial institutions, the Wells Fargos, the Chases, the B of A's, and so on, their business model is primarily around how do we give the customer what we absolutely have to give them, and how do we achieve the capital uplift for our shareholders and ensure that we've got net tangible asset backing of X and EPS of Y. And When you've got polar opposites in terms of your business strategy, from the too big to fails down to the community focused financial institutions, if technology was a level playing field, I'm almost certain you'd have 80% of the market operating with the community focused FIs. And we recognize that. And from day one, when we were just a white label digital banking provider, we said we wanted to level the playing field. More recently, we've started saying we want to tip the playing field. We want regional and community banks to outshine what the big banks are doing. And that has become our passion. Our vision is to give these regional and community banks the ability to dream big and deliver exceptional. That's painted on the walls in our offices. It's on our website. It's what we stand by. It's what we've stood by for the last 5 or so years of our existence.
I love that. I love that. And, I'm particularly interested and fond of what Cliff, your chairman, said to you there is that, his community bank had not given him a reason to leave. And it reminds me of something that a friend of mine said when he was thinking of going to work at Bank of the Ozarks, believe it or not. He said, look, money has a momentum, right? So a lot of these, new bank startups, as you've talked about, new banking solutions are thinking to themselves that it's going to be really easy for people to go, oh yeah, I'm going to give up on my other bank because, they're slow or they don't have whatever I want or they're not as flashy or whatever. He's like, but they're ignoring the fact that people don't like to move their money. It's a pain in the butt to move your account from one place to the other. You've got all your, payment stuff set up already. You may have your mortgage there. You may have your kids' savings accounts there that you kind of, move money from one account to the other. You've been there for a while, right? So a financial institution has to give you a really, really good reason to take your money elsewhere. And I moved from one bank to another a long time ago. And the reason I left was they called me and said, hey, look, we think there's been some fraud on your account. We see some charges that we think are sketchy. Did you do these? And I said, no, I didn't. And they said, well, you're going to have to come down to the bank to fill out a form. And I said, well, how quickly can I get my money back? This is not an insignificant amount of money that was stolen. They're like, well, it's going to take like 7 to 10 business days to get your money. I'm like, that's crazy. So then I called my current bank and I said, how long would it take you to reverse charges that were fraudulent? And they said, well, 24 hours. I'm like, sold, right? So they got me on service, but it took something big like that to get me to move. So I love the fact that Cliff made that observation and it inspired you and the Urban FT team to target this space. Really, really interesting.
As a society, we're fundamentally lazy. So when you talk about, changing your direct debits, changing all the bill payments that we've got, we don't like doing that. But on the flip side, we can leverage the fact that we are somewhat lazy to say that's why so many of these capabilities are about creating automation or intuitive transactional services for the end user. Later this year, we're launching a new service in conjunction with MasterCard and Duke University. And it's referred to as the Automated Savings Initiative. And it's where you're setting up a few rules and money is slowly during the course of the month, based on certain actions, getting put into your dedicated savings account. And the idea behind it is that it's painless. You don't feel it. You don't notice it. But at the end of the month, you get a statement. You say, wow, I saved $100 this month. And it is all about creating functionality to overcome some of the challenges that we create for ourselves because we are either too lazy to do something or we're not strict enough to adhere to some savings goals. So it's both the opportunity as well as the driver.
Yeah. I love it. Let's talk a little bit about the tech nerdiness side of things, right? Because we've got a lot of tech folks who are listening to this show, and I'm sure they're going to be interested in this. What sets Urban FT apart from a technology perspective, right? Because I know that one challenge that's inherent in serving smaller companies is usually that they have relatively small budgets and even smaller teams on their tech side, right? So how have you made it possible? You kind of mentioned it slightly that, there's this one single login and one single connection for the API for the core. But how have you made it more accessible? What are some of the special tech things you've done to make it easy for a smaller tech team at a community bank or regional bank, as you mentioned, to implement Urban FT?
Well, firstly, I know tech nerds are very popular these days. I'm certainly not a tech nerd. So I can't necessarily speak to the technology as well as some of the people might wish me to speak to it. But I'll certainly give it my best shot. Our X35 FinTech Core, the genesis of the name, by the way, is to still have the X factor, not just today, but beyond 2035. And the architecture of the platform is that, think of it as a multi-layer solution. At the top, we've got a range of microservices that are available for financial institutions to consume any one of the capabilities or functionalities that we have. That top layer also supports a range of native capabilities that are delivered again as APIs. They could be delivered as SDKs, or it could be a full digital suite that is branded to meet the requirements of our client. Then you go into what we refer to as the demilitarized zone. And within there, you've got your business logic. You've already gone through a firewall, but you've got your business logic. You've got a number of proxies and VPNs that then take us down to modules that sit beneath yet another firewall. And it's in this bottom layer that sits on top of a bunch of databases as well, that actually we can swap in or out different components of functionality over the years. And as we bring in something new, or we take something out, or we swap it, or we do an acquisition, whatever the case might be, up in the top layer where our financial institution is consuming the services, there are no upgrades necessary. There are no changes to the service. Obviously, if we have new capabilities come in, then there'll become new microservices available that then enable them to build out new functionality in their own experience. But, the difference is, as I said earlier, this is a single logon, a single set of microservices, or the consumption of some of these native services that is constantly evolving. Every single month, there is a new release happening, but it is a release within our own platform so that the client is not having to consume the releases. And so then when we think about how does that help our clients, well, number one, it's one set of APIs that they're building on. Number two, having to do monthly, quarterly, or even annual updates. And number three, it is a comprehensive suite of functions that they can start by consuming just a few. And over time, whether it be a year, whether it be 5 years, they can consume many to roll out a very comprehensive product offering of their own that is entirely suited to the unique requirements that their clients or members have.
I think that's really interesting and so powerful. And it reminds me of Travis Schwab was on the show. He's the CEO, founder of Aventus Systems, and they make a compliance and trade tracking solution. And, one of the things that he talked about was there is this efficiency, innovation, and a surety of quality that happens when you have a centralized service, a SaaS-based solution like what you're delivering, in that, you know, if these companies were trying to roll their own, if you will, build their own solution, it would be challenging because if something broke, they wouldn't be getting the learnings from all the other organizations that are using the X35 core, right? They would have only learned things as they came up in their own organization and occasionally talking to somebody. But because you are deployed throughout 500 plus and growing organizations, you're constantly innovating. You're constantly seeing new opportunities for new features. You're constantly seeing things that need to be fixed, right? And then you can fix them and roll out, and everybody gets a fix. Even if company A, the bank here in Austin, Texas, didn't experience, let's just say, a problem, but a bank up in, New York did. Once you see that, you fix it, everybody gets the fix, right? So I think that's a really, really interesting thing to consider, that don't build your own if you don't have to, right? Tap into something like your FinTech Core here, because it can really help you innovate faster and focus your attention on your business and less on the tech.
And from our point of view, we've actually got 500 different clients that are sharing with us where they feel that the customers' needs are heading. And we've got those same 500 people telling us what they need in order to stay ahead of their competitors. And we're able to take that, look at how we create a solution that addresses those individual needs, but actually on a holistic basis. I heard an interesting statement the other day, and it came from someone that was working with Apple back in, I think, 2008, and it was around banking. And this organization had gone to Apple and said, look, we've got this unique app. It'll create a different experience. If they open this app, it'll be a different experience based on the geography that the user is in. And apparently, Apple's response was, we think that you're missing the point. Apple has invested millions, if not billions, into creating an experience that is the same in every single geography that the phone is sold, except for, say, language and the characters that it uses. And so as to say, you don't want to create a different interface or system for every geography you go into. You need to invest in finding what solution will solve all the geographies that you're in. And so if you take that logic backwards and look at how it applies to us, we need to listen to 500 customers. We need to identify a common theme, and then we need to find one solution that addresses every one of those requirements.
Yeah. Yeah. I love it. We all like to think of our customers or our business as special snowflakey, if you want to call it that, right? That everything needs to be customized. But the reality is there's a reason why, you know, Starbucks is able to sell the same type of coffee through thousands and thousands of stores all around the world, right? You can find out what people want and what they need and what serves their wants and needs, and you can deliver that at scale if you do it right. Really, really interesting. So, a couple of quick things as we get ready to close it out here. I know we're getting towards the end of the time we have booked with each other. Your website mentions that you enable any financial institution of any size to rapidly create and deploy your solutions. How small are we talking about here? And the reason why I asked this question is, as I mentioned a couple of times, most of our audience is in the financial services ecosystem, of course, and some of them are in the fintech space, right? They're innovators, they're thinking about building new things. I assume many of them will be interested in exploring how they might be able to tap into the X35 FinTech Core. What's a size that you would consider as like the smallest size? Are we talking startups here, new companies, or is it should be an ongoing, more established company?
So, as I said earlier on, I think the definition of a financial institution has changed now, and it's not just the banks and credit unions. It is sort of the non-traditionals. And today we might think of a non-traditional FI as being a neo or a challenger bank, but it could also be the City of New York. It could be the Federal Department of Education. It could be Kroger department stores. So if I were to answer that in two parts, I'd say banks and credit unions are the more traditional clients that we might have or that we do have. And, I would say that on the smaller side, we're talking $50 million in asset size. However, then when I go to the non-traditional FIs, we really do have anything from startup right through to we currently serve the Federal Department of Education on the Federal Student Aid Program. And so what we say on our website, any financial institution of any size can come in and look at our a la carte menu of functionality and create a proposition that serves their business purpose. It's absolutely case in point. And you can be a startup, you can be a $2 billion bank, or you can be a government department. Our functionality is there to be leveraged to solve any combination of needs that those different entities might have.
I love it. I love it. That's exciting because look, that's how innovation moves, right? If a solution like your FinTech Core is made available, and then for you, it kind of fills that need of like, look, there might be something we haven't thought about. So let's make it accessible to companies. Let them come in, let them start consuming it, let them start tinkering around. And as you mentioned, you're getting feedback from 500 plus companies now. I mean, who knows? 501 or 517, wherever it may be that comes in, might be the one who shows you, hey, there's this other opportunity here that adds lots of value to your company and to the rest of everybody else. One of my fun questions that came up as you and I first met the other day, we did a pre-call on Zoom, and I heard your Australian accent, and I'm sure everybody's noticed. So you're an Aussie living in New York, heading up a US based fintech company. I wonder if your Australian heritage, if you will, has made you see opportunities.
That maybe American born entrepreneurs might miss.
The reason why I asked this question is a few years back, I had the opportunity to meet with some executives from PIMCO, and they were pretty convinced that an Australian style superannuation retirement plan structure might be coming to the United States sometime soon. And for people who don't know what that is, it's, think of it as a defined benefit plan, kind of like more of a traditional pension that you can expect a certain amount of money to pay out versus a 401k defined contribution plan. But it's hybridized, right? That you, as the employee, continue to contribute to this thing. And there will be a defined benefit at some point in time, a kind of guaranteed amount of money that comes out and your employer pays into it. And it's portable though, like a 401k. So it's kind of hybridized in its approach. So really kind of innovative. And I was unaware of it until I had that conversation. So I wonder if there's any other interesting financial solutions that maybe American consumers and businesses might find attractive that you as an Aussie know about and they're like, hey, I'm going to bring this here.
You know, I've never really thought about whether the perspective I have as someone that was born and raised in Australia has any real impact on how I look at opportunities here in North America. But I do think it's interesting you bring up superannuation, but I think one of the reasons that it's been so successful is that you have compulsory employer contributions of 9%. And so if you're getting paid $100,000, and more importantly, if you're offered a job at $100,000, your employer is actually paying out $109,000 a year because there's a compulsory 9% contribution. That created a massive industry in Australia. All these superannuation funds are sitting on piles and piles of cash. Ultimately, it's probably propping up the market there because the cash has got to go to work. And, there are various restrictions on the jurisdiction in which that cash can be invested. But some people will say to me, sort of looking at this in reverse, do you plan on opening an office in Australia? Well, the population in Australia, and I might be slightly off now, but the population in Australia is 26 million. You've got 4 very big banks that effectively control probably 90% of the banking market. Technologically, those banks have been way ahead of the curve, possibly even ahead of where Europe has been. So, we have been experiencing in Australia, even at the time that I was still living there, technology and banking capabilities that are superior to what most Americans have available to them today. I wouldn't necessarily say that that has influenced the way in which I do business here. The one thing I'll say about Australians, though, is that we're very direct, we're very forthright with our opinions, and we're not afraid to challenge the status quo. And I think that, if anything, those characteristics have definitely carried their way through the way in which I and the management team here operate our business.
Yeah. I felt compelled to ask that question because, like I said, I have seen, as you described, some innovation happening in other parts of the world at a much faster clip than we see here in the United States. And I think sometimes we have this American exceptionalism ideal, but because a lot of American entrepreneurs and a lot of American consumers don't often look outside of our own country to see that, like, there's some things happening that are really cool other places. You might actually like that solution here in the US. And I brought up superannuation plan as an example, but in terms of mobile payments and so forth, some of those things have taken off way faster in other parts of the world.
It's so really interesting.
Closing it out here, everyone who comes on the show has to have an ask of the audience, right? That you've got this audience, people have been listening, they're captivated. Let's tap into the collective wisdom, if you will, of the crowd and the collective networking firepower to either solve problems or help you recruit or whatever. So what is your ask of the audience? If you could ask people who are listening for one thing, what would you ask?
It's interesting you put me on the spot like this, but the first thing that comes to mind is to say we all have a view on how we want to manage our finances and where our money should go and how we want to access it and when. But what's the view on what the bank of the future should look like?
I love it. I love it. It's really, really cool. And I'm sure you get a lot of different ideas, a lot of responses on that.
Well, let's hope so. It might give us something we can actually leverage and put into one of our upcoming releases.
Perfect. Perfect. Well, Richard, this has been a fantastic time spent with you, and I really appreciate you're so generous with your time. I know we had a little bit of a hard time getting started with some technology issues and so forth. You were very patient, and I have really enjoyed this conversation. I hope this is just the first of many to come. I'm sure some people are going to want to follow up with you, and whether that's answering your ask there or it's they just want to learn a little bit more about Urban FT. Is what's the best way for people to follow along with you and connect if they need to or want to?
My LinkedIn profile is probably one of the better ways to connect. We've also got the company page on LinkedIn. We keep it regularly updated. And certainly I'm open to messages through LinkedIn. So I'd love to hear from people that are interested in what we're doing, people that have got ideas on what we could be doing better, and anyone that feels that we can collaborate in some shape or form.
Perfect. Perfect. Well, I'll make sure we link a link to your LinkedIn profile on the show notes. Thank you very much, sir.
Mike, thank you very much.
Appreciate it.
Thank you, Mike.
Thank you very much for listening to this episode of the SoFin Podcast. It's always a pleasure to have you with us. Please do make sure you like and subscribe to the podcast by going to finservmarketing.com/podcast. Let us know if you have a suggestion or question for a topic or a guest that you'd like to see on the show. That's how these guests are getting to us, right? Richard Steggall came to us from Kelly Ferraro. She's batting like 1,000, by the way, because she actually brought Runic and Samir, the founders of Vise, to me. And we've had them on the Modern Financial Advisor podcast by Truelytics. And we've actually recorded an episode of the SoFin podcast to be released at an undetermined future date because we covered a topic that is not ready for public consumption just yet. But I'm really excited about that episode because I love Runic and Samir. I'm looking forward to doing more shows with them in the future, but you're just going to have to hold off and wait for that episode. But anyway, Kelly is sending in suggestions for guests. She brought us Richard, brought us Runic and Samir. I have a feeling she's probably going to suggest other people in the future. But if you think you have somebody who is a good guest for this show, an appropriate guest to talk about their fintech company, please send that person in. You can reach out to me. I'm Mike Langford at finservmarketing.com. You can just go to finservmarketing.com and use the contact form. You can hit me up on social. I'm at Mike Langford pretty much anywhere. And even if the suggestion is, hey, it's me, I'd like to be on the show, I think me and the fintech company I'm building would be great for your audience. Please, I want to hear from you because that's what this show is all about, shining a light on really cool people and really cool solutions that we can all learn from and maybe benefit from the solution that's being put out there, okay? All right. Lastly, as always, make sure you are staying safe. Please do wear your mask, keep your distance, and my favorite, be nice to each other, okay? We really need it, okay? Home stretch here, 2020, right? Only a few more months left. We can get through it together, all right? Be nice to each other. All right, we will see you next time on the SoFin Podcast. See ya. Bye.